Dear esteemed colleagues and friends, this week, I shared an overview of the previous market analysis on Saturday, which I trust you found beneficial. The focus of today's presentation is the examination of an additional 10 markets analyzed across various time frames. In the upcoming week, I will delve deeper into the markets previously reviewed daily, providing a detailed outlook that I believe will assist you in your decision-making processes. We will explore the application of Ralph Nelson Elliott's theory, specifically addressing how to effectively utilize the rules and guidelines of the Elliott Wave Principle in developing analytical insights. We are examining the weekly chart of the Milano Italia Borsa Index. Since July 2012, we have observed a leading diagonal pattern that has adhered to established rules, indicating that the market has reached maturity. After completing the first and second larger waves, we anticipate growth in the third larger wave. I have labeled the extensions within the third wave on a larger scale, and this scenario appears plausible. This possibility arises from changes in the wave count necessary for completing the third wave, which is likely to create an extension within itself. According to established guidelines, this includes the identification of 1 and 2 and 1 and 2 patterns. Now, let's take a closer look at the daily chart of the third wave. The first wave displays an impulse pattern, while the second wave is characterized as a double zigzag pattern. We are currently observing the completion of the extension of the third wave within this structure. The third wave has expanded by 138.2% compared to the first wave, and there is a possibility that the fourth wave may develop into a sideways pattern based on the current wave count. To finalize the fifth wave, it must surpass the previous price peak, thereby completing the third wave on a larger scale. Let's take a look at the FTSE 100 index market and examine the weekly chart. Starting from March 2009, we observe a diagonal leading pattern, followed by a significant correction in a zigzag formation between the 61.8% and 78.6% Fibonacci retracement levels. This pattern marks the completion of both the first and second waves of the largest cycle. Current data suggests that we may be witnessing the growth of the third wave, which could be extending further. Alternatively, it might first complete one cycle of 8 waves, eventually leading to the first and second waves of the third wave. I have identified potential targets for the next wave, as all waves tend to extend in proportion to their preceding waves. To gain a clearer understanding of the wave structure, let's examine the daily chart. Here, we see that the second wave retraced between the 50% and 61.8% Fibonacci levels, while the third wave is nearly equal in length to the first wave at the same degree. In most impulse patterns, one of the operational waves, waves 1, 3, or 5, tends to extend, with the third wave being the most common for this behavior. However, the fifth wave can also exhibit extension in stock and commodity markets. Given that the second and fourth waves usually alternate, we can expect the fifth wave to extend as well. Now, let's check the 4-hour chart. It shows 5 waves moving upward in a bullish trend, followed by a correction pattern, which could be a classic zigzag or possibly a sideways pattern. Assuming the second wave has completed, we should anticipate rapid market growth. It's crucial for the price to break the previous peak. Any correction pattern is necessary for the continuation of the bullish trend. Stay vigilant and be cautious not to be misled by any invalidation of the price analysis, friends. Let's examine the monthly chart of Nvidia Corporation. There has been significant growth in this market, and surprisingly, the third wave has progressed to 361.8% of the Fibonacci extension compared to the first and second waves. The important question now is whether the fourth wave has ended and if the price will rise again into a bull market. Given that the second wave was a deep correction, the fourth wave is expected to follow a sideways pattern, such as a triangle, flat, or complex sideways combination, If the current price action shows a corrective pattern after breaking the previous market peak, we may see an extension into the bull market. On the daily chart, a more detailed examination of the third wave pattern reveals a harmonious structure where almost all three waves are equal. After reaching the price peak and completing the third wave, we see three waves downward followed by three waves upward. It's crucial to note that if a zigzag pattern forms, it may develop into a flat pattern. Alternatively, it could be a sequence of waves 1 and 2, but the second cycle must not cross the beginning of the first wave. Let's analyze Microsoft stock using a 4-hour chart. This analysis indicates a downward trend in the market. I have identified 5 waves that I refer to as the first wave of greater magnitude. Notably, waves 1, 3, and 5 are shorter than their preceding waves. This suggests that the second order of the larger wave may conclude in a simple zigzag pattern since the first wave is extended and further elongated within the larger wave. Now, let's examine the 1-hour chart. Here, I have labeled the first wave as A, which follows an impulse pattern and includes an extension in the third wave. The second wave, labeled B, appears as a simple zigzag that completed its move between the 61.8% and 78.6% retracement levels. The current price action is showing a smaller impulse pattern along with a range correction. This analysis does not invalidate the price movement and suggests a potential expansion in the bear market. It's important to note that analyst Mr.NoBody presented a bull market scenario a few weeks ago. If my analysis proves invalid, a further investigation of that perspective may be necessary. Let's examine the coffee market from the beginning of October 2022 using the weekly chart. It's important to note that several financial markets, including coffee, natural gas, and cocoa, have shown contradictions in their historical graphs. I believe we are likely to experience a leading diagonal pattern in the coming years, followed by significant growth in the coffee market, which is still maturing. Based on the available data and my observations, the market displays a zigzag pattern, where wave C is expanded to 161.8% compared to waves A and B. This forms the first wave of a larger degree. Following this, we have seen 3 pullback waves, leading to another zigzag pattern that constitutes the second wave of a greater degree. After these developments, we have witnessed an impulse pattern that has now reached the target set by the previous larger wave. While a corrective pattern may form next, it's also possible we could see a diagonal pattern or continue with an impulse pattern. Let's turn our attention to the daily chart and focus on the wave A impulse pattern. Wave A aligns with the expansion of the third wave, while wave B forms a zigzag pattern retracing between 61.8% and 78.6%. The subsequent price action could also be classified as a triple zigzag, representing the first wave. After completing these 3 pullback waves, we can expect a pullback that may serve as a corrective pattern, finalizing the second wave within the defined range. We should also consider 2 additional price actions occurring in the bull market. Now, looking at the 4-hour chart, we can analyze the first wave. The second wave must not extend beyond the beginning of the first wave. In an impulse pattern, wave 4 should not overlap with wave 1. This rule applies to all non-leveraged cash markets. In contrast, futures markets can create extreme short-term price fluctuations due to their high leverage, which typically wouldn't occur in cash markets. Nevertheless, overlaps are mostly limited to daily and intraday price movements and remain quite rare. It appears that the 5th wave is forming an ending diagonal pattern. Following this, we can expect a corrective pattern, which could be a simple or multiple zigzag within a certain range, before seeing further advancement in coffee during the bull market. Gasoline market analysis utilizing daily charts. Since March 2020, the gasoline market has exhibited a consistent upward trend. The first wave has extended, while the second wave appears predominantly flat. The third wave is advancing rapidly, and the fourth wave demonstrates a pronounced pattern. Ultimately, the fifth wave manifests as an impulse pattern of a higher degree compared to the first wave. The second wave is likely to conform to a classic zigzag pattern, in which wave A functions as an impulse, wave B is characterized by a simple zigzag, and wave C culminates in a trailing diagonal formation. Consequently, upon the conclusion of this corrective pattern, it is anticipated that the market will enter a new cycle within this upward trajectory. Wave A has been identified as an impulse pattern, whereas wave B is recognized as a double zigzag that retraces between the 38.2% and 50% Fibonacci retracement levels. It is expected that wave C will terminate with an ending diagonal. The first wave is defined by an impulse pattern, and it is expected that the third wave will similarly adhere to this impulse structure. Once this is completed, the market will transition into the fourth wave, which will overlap with the territory of the first wave. It is imperative to note that the second wave signifies a deeper correction. Following the conclusion of this correction, the fifth wave is predicted to be shorter than the preceding two waves, thereby culminating in the classic zigzag formation. Let's examine the market for the currency pair of the US dollar and Japanese yen. Since October 2011, the dollar has been appreciating against the yen. Interestingly, recent declines in the dollar have not significantly affected this upward trend. The current pattern can be interpreted as either a zigzag or an impulse pattern. However, I am considering it as an impulse pattern within a bullish market scenario. Notably, the first and third waves are equal. If the pattern I have identified is running flat, it could extend further in this bullish market and surpass its previous peak. Conversely, if it is an extended flat pattern, it should be complete within the specified range. If it fails to do so, we may see a downward extension, possibly transitioning back into a bullish market as a double zigzag. To gain a clearer understanding, let's look at the daily chart. I have identified the pattern as a running flat, characterized by 3 waves down, wave A, and 3 waves up, wave B, which has progressed to 138.2% of wave A. This was followed by a rapid impulse pattern that reached the 3 typical targets that completed a running flat pattern. The key question is whether the fourth wave has been completed. If it has, the price of the fourth wave should break the flat pattern. Subsequently, any corrective pattern could extend based on price action. If this scenario is invalidated, the pattern should then be considered as part of an extended flat pattern. We shall analyze the euro-yen currency pair, commencing with the weekly chart. Since the bullish market breakout in October 2000, 3 upward waves have been observed, forming a zigzag pattern that signifies the completion of the larger wave, W. This period has been succeeded by 3 downward waves, representing a classic zigzag correction that retraces between 78.6% and 90% of wave W. Wave A embodies a classic impulse pattern and may undergo 3 retracement waves. Furthermore, the extension of wave C targets the previously established levels, which suggests the potential completion of wave Y, accompanied by 3 larger waves indicative of a bear market for wave X. Nonetheless, it is my assessment that wave C retains the capacity for additional upward movement to finalize the impulse pattern prior to encountering a market decline. Next, we will examine the daily chart of wave 3. In this context, the first wave is identifiable as an impulse, whereas the second wave presents as a triple zigzag, reflecting a lateral pattern that is affected by the fourth wave. Additionally, the third wave exhibits extensions that may substantiate a higher wave pattern, contributing to the bullish market trajectory and facilitating the completion of the impulse pattern. We will also examine the pound sterling to Japanese yen from the weekly chart perspective. Since the beginning of September 2011, it has shown a bullish trend, similar to the previous two currencies we analyzed against the yen. I have identified Wave A as an impulse pattern, Wave B as a classic zigzag, and Wave C as another zigzag pattern. The fifth wave of Wave C still has the potential to develop further. Additionally, there is the possibility of a bearish market since it has extended to 100% of Wave A. It could require at least 3 waves to complete an X wave, ultimately leading to a multiple zigzag pattern. Now, let's check the daily chart to analyze the third wave more precisely. The first wave is an impulse pattern with an extended third wave. The second wave appears to be an extended flat, correcting between 38.2% and 50% of the retracement. The third wave is almost equal in size to the first wave, while the fourth wave shows a sharp pattern. There is potential for another wave to emerge in the bullish market. The price break of Wave B, from this sharp zigzag pattern in the fourth wave, which has corrected between 38.2% and 50% of the retracement, could confirm an extension in the bullish market. Additionally, a correction pattern should be formed, and any invalidation of the price will not undermine the analysis. Today, we will review 2 cryptocurrencies, starting with Solana. As indicated by my labeling, the third and fifth waves are nearly equal, while the first wave of this impulse pattern is shorter than the other 2 waves. This marks the end of the motivational phase, with the first wave being part of a larger structure. But will the second wave continue? I will share 2 scenarios with you. First, it could form a double zigzag with 7 swings, or extend again. This idea is based on the current data pattern. In the bullish scenario, the first wave is calculated similarly to before, but the second wave is depicted as a zigzag pattern, where Wave B is a flat pattern, and Wave C completes as an impulse wave with acceleration. After that, the price could form a 1 and 2 pattern, which may run exclusively, or the break in the wave could lead to a more complex corrective pattern. Alternatively, it might evolve into a sideways movement if it is a simple or multiple zigzag pattern. After the market peak, we can expect a subsequent decline. I have examined the 4-hour chart more closely. If the second wave has been completed, we can identify 2 price actions, Wave 1 as an impulse and the second wave as an expanded flat pattern. This would set the stage for another set of waves 1 and 2, where the second wave also forms a flat pattern and then extends, but it should not surpass the beginning of the first wave. We will examine Dogecoin on the daily chart. Since the beginning of June 2022, I have labeled 2 cycles as 1 and 2 according to the wave count and the inventor's data. The first wave is more substantial, while the second wave follows a classic zigzag pattern. However, the second cycle displays an impulse pattern, with the third wave showing acceleration. The second wave in this cycle is a double zigzag pattern. Currently, the price action could represent 3 cycles of 1 and 2 or form a diagonal structure. This situation is primed for any type of pattern that could signal a new motivational phase. The price line that would invalidate this analysis is marked in red. It's also possible that this could transform into a triple zigzag, which would create an expanded diagonal at a higher degree, as long as it doesn't exceed the previous second wave. Exiting the channel could significantly confirm this analysis, while failing to do so may indicate potential drawbacks. The price marking the unmatched wave is important, and crossing the X wave of this double zigzag could offer stronger confirmation for trading in a bullish market. I wish you a prosperous week ahead and express my gratitude for your continued support. Please remember to like, comment, and share, as these actions are vital to supporting our channel. If you are new to our community, welcome. This channel is dedicated to the education and analysis of financial markets through the lens of the Elliott Wave Principle. Sincerely, Mr.NoBody and Mrs.NoBody.